Ben Lyon is the director at KopoKopo, and today he'll be talking about acquiring and managing a profitable merchant network and the lessons learned from East Africa. Thank you, Ben.
Thank you. I think I may be the last person between you and lunch, so I'm actually going to try and go quickly, and I thank you in advance for your attention. My goal today is to tell you a little bit about our journey as a company, having worked with Safaricom in Kenya to now directly manage about 12,000 merchants, and really over the last 2 to 3 years, growing the activity rates of those merchants from something that was troublesome in the 20% activity rate to something much more promising, which is now 50% plus for our new monthly cohorts. So the presentation today is going to focus on kind of 2 tracks. One is, what have we done over the last few years to drive merchant payments? And then 2, what do we think we can do to help you if you're starting to think about a merchant strategy in your respective markets and respective companies? And to be clear, by merchant, I do differentiate that from agent. When I say merchant, I don't mean deposits and withdrawals as a kind of a cash merchant. I do mean actually a retailer that's accepting a payment for a good or service at the point of sale. So this could be a restaurant where you're paying for your lunch. It could be the salon where you're getting your haircut, etc. So the agenda is just going to be an introduction to who we are, why we believe merchant payments matters across the industry, why we think it's relevant to you, what we think you'll need to learn from our experiences in East Africa and why they'll be relevant in your markets, and then ways we could potentially go to market together to launch a similar product through your brands and in your markets. So first, an introduction. Who is KopoKopo and why should we be up here to talk to you about merchant payments? We were the first merchant aggregator of mobile money providers in the world. We launched in 2012 a product with Safaricom in Kenya that has now been rebranded as Lipa na M-Pesa, which means pay with M-Pesa. Today we serve as Safaricom's largest merchant aggregator, representing a base of about 12,000 merchants, processing several billion Kenyan shillings a year. And growing very healthily. We've been doing this now for about 12 years in Kenya. We've also just recently expanded to Tanzania, where we're currently working with Vodacom M-Pesa and Tigo Pesa to start helping them acquire merchants to accept payments at the point of sale. Along the journey of building out this merchant base, we've had to build a unique set of tools for ourselves. Because as you'd imagine, and as I'm sure your experiences have echoed, when we started acquiring merchants in mass, and at peak we were acquiring 2,000 merchants a month, and we'd really optimized kind of the top of the funnel. When we started doing that, we started recognizing some troubling trends. So when you looked at the channels that you would use to acquire your merchants, which channels are actually driving the right kind of performance? Which are bringing you revenue through activity? Which are more likely to be fraudulent? How are they fraudulent? And what can we do to mitigate that? So that's just one example of we've had to optimize all of those processes for ourselves so that we can build a merchant network on a national level quickly, and then also start driving that merchant network to not just have a sign, but to also actually encourage their customers to transact so that you can increase ARPU through that base. And start extending the electronic money loop, keeping the money in your system, turning the cost center that is an agent network into the revenue center that is a merchant network, et cetera. And so I'm going to tell you about some of those tools today, but really specifically with regard to the problems that they address that you will likely face as you start rolling out your own merchant networks. So why does this matter? Why should you care at all about merchants? First, we think that the merchant opportunity is at least 20 times more common than person-to-person transfers, than airtime top-ups, than bill payments, et cetera. Now put yourselves in the shoes of your customers. I will remit funds domestically to my family and to my friends, a few times a month tied to my pay period. So that's highly periodic. I will top up airtime, let's be generous, let's say 5, 6, 7 times a week, maybe. I'll do a utility payment once a month to whatever utility providers I have, et cetera. So you see now the opportunity to be a daily part of this customer's life is relatively limited. But now ask yourself, how many times is that customer paying a merchant every single day? So now let's be conservative, 4 or 5 times a day. Play that out over a month now, and you have an opportunity to become a daily and consistently relevant part of your customer's life. And of course, that one helps the macroeconomic goal of financial inclusion in that you're driving a larger percentage of GDP online, but really more to your bottom line, it increases your ARPU because if you provide a merchant base where these customers can transact, they have less and less reason to withdraw that money at an agent where you pay a commission and where you see that money leave your system. And the more they do internal kind of on-us transfers from themselves to a merchant, to another merchant, to another merchant, is margin for you as the provider. So the merchant opportunity is massive. It is massive and growing. Again, we think it helps you increase the ARPU of your wallet users. It increases the value proposition of your service offering in general. It decreases the churn of those users, again, because you've become a very integrated part of their daily life. It extends the e-money loop. And more importantly, too, when you think about it from a whole of business perspective, for mobile operators, for banks, it gives you a new market segment that hasn't perhaps been cracked with the P2P opportunity. It gives you SMEs. SMEs need data, SMEs need internet access, SMEs need access to capital, et cetera. It's not just the payment. It's an entirely new market for your business that has potential benefits for multiple business units. So what do you need to make it happen? If you want to go launch a merchant network today with your mobile money system, so let's use an example and say that you are a mobile network operator, you're issuing wallets today to try and get people to use your system, and you want to go out and now also start acquiring the other side of the market, which is a merchant. We tend to think of it in these 4 categories. You need the systems and tools to monitor your acquisition efforts, your order processing or onboarding efforts, your activation efforts, and your management efforts. We kind of break these down. I'll just read these for your benefit. When it comes to acquiring them, you need a way to manage your channels. Today, we have 4 different channels. We acquire latent demand online. So even as I was just sitting in the back of the room, I was seeing 20 or 30 customers in Kenya applying to become a merchant online and uploading their KYC materials and everything, completing all of the verification processes online. And so that's one way that we're capturing latent demand that's searching for us. Then we also go through channel partners that are bringing us hundreds of commissioned sales agents. Now, as many of you know, when you have a channel partner, you have a single point of relationship with this channel partner, and they have hundreds of sales representatives. It can be very difficult to make sure that those sales representatives are actually selling the product that you've made and are selling the value proposition that you've identified. The attrition rate of those agents is very high. In the remote areas of the country, if they're working on a commission basis only for an application, you can encounter a lot of fraud, et cetera. So you need a way to manage all of your channels at a very granular level so that you can see if me, as Ben, if I acquire 10 merchants for you in the month of November, first, how many of those merchants ever got set up? How long did it take them to get set up? And what revenue have they brought me? And the more you understand that granular level of your feet on the street as you're acquiring your merchant network, the better you can motivate those sales channels to acquire the kind of merchants you want, which are active merchants. And part of this as well is the commission management tool. The way you motivate me is to tie my commission to the milestone that you've set. So you'll pay me a little bit when I acquire a merchant for you, but you'll pay me a lot more once that merchant hits, let's say, 10 transactions a month, where they've hit the point that you know the merchant has identified first value, and now they're with you for a lifetime. Next is order processing and onboarding. When we start looking at the SME channel, SME owners are incredibly busy. And as much as we like to think about payments all day as we're in the industry, it's perhaps the most fundamental but the least important part of the day for that merchant. They're not thinking about well, I need to accept MTN today and I need to accept Airtel tomorrow. They're thinking about accepting Naira. And so this is something that's going very quickly for them. They're really more worried about employees and making sure they're not having internal leakage, et cetera. So when a merchant has identified themselves by applying for your merchant tool, or let's say your till number as we have in Kenya, you need to turn around that application very quickly. When we started in Kenya, we had about a 3-month turnaround time. And what we saw was because it took so long, the merchants had completely forgotten about the value proposition that they signed up for and didn't even come to first value. It's not even fair to say they churned, because they were delivered a starter kit and they were delivered branding that was just not in their head anymore. And so they never transacted. We then reduced that over the months to a few days. And now we see that in that first 30-day period, they're immediately starting to transact. And once they transact and have a good experience with you, again, this is where you lock in a new channel for a lifetime. On the activation side, you need to be able to measure the activity rates, and you need to be able to provide those merchants tools that motivate them to use your service. And by measuring activity, that needs to be granular. Which merchant categories should I be targeting? Which are my early adopter? Which are my mass market? Which are my laggard? And it took us a long time in Kenya to identify this as well, and see that, let's give you one example. Pharmacies in Kenya were a mass market merchant segment. They were not an early adopter, but once we'd hit a critical mass with the early adopters, we started seeing the mass market coming in. And you need the tools to be able to measure that on your own so that you're not wasting your effort acquiring in the adoption curve the laggard of the industry, and instead you're hitting all of the early adopters quickly so that you can get some fast traction. And then on management of the merchant, it's not just a product that you give them and walk away, it's an ongoing service. And that merchant needs to one, be able to accept the payment, but also to learn more than the payment. And you need to provide value beyond the payment. So in Kenya, we provide basic business intelligence tools for that merchant. There's an SMS marketing module that every merchant gets, where they can send an SMS to their customers based on their purchase behavior. So now you're seeing that you're turning the payment into something valuable that helps the merchant increase their revenue. And so now they have a motivation to push this for their customers. So these are some of the systems to think about. So what I want to stress to you today is that the merchant opportunity is relevant. It's relevant in this market. It's relevant to your company. It's significantly larger than P2P. It's significantly larger than utility payments, but it's complicated. And as you're starting to think about your own strategies, there have been some lessons that we've learned in Kenya that we're happy to share with you. We've also, one of the things we've just launched, if you go to our website, KopoKopo.com, and look at the international section, is actually a white-labeled service that is all of our technology that we've built for ourselves and used in East Africa to acquire an active merchant network at national scale, is now available globally to partners such as yourselves. So if you have any questions, please do come find me during lunch today. You can email me at ben@kopokopo.com. Or visit our website and contact us through there. But we're happy to be an open book and help mitigate some of these pain points for you. So I'll end there. Thank you.